All right, so today we're diving deep into the world of Tom Sosnoff.
Oh, yeah. This will be a good one.
I think so too. I mean,
Huh.
you've clearly clicked on this episode, which means
You want to hear about him.
you're interested in options trading.
Most definitely. And
He's kind of a legend.
yeah. He's a big name.
When you talk about options trading,
Yeah. And there's a good reason for that.
you can't really avoid
No,
him.
really can't.
So we're going to trace his journey
Yeah.
from
At trading pits
to trading pits to,
to building these billion-dollar companies
Yeah.
to becoming,
empowering individual investors with options.
a leading voice in teaching people about options.
Absolutely.
And what I think is really interesting about this is we're going to uncover some strategies
That
that
you might be able to use.
you might be able to use yourself.
Yeah, even if
You're
you're
not.
not a super
The Goose.
experienced.
A seasoned trader.
Yeah, so let's get into it.
Yeah, so let's start with like where he came from.
Yeah, so back in the 80s,
Mhm.
I mean, this is
This is ancient history.
ancient history, right?
Ancient history.
The beginning of options trading.
Yeah, he was a market maker at the CBOE.
Yeah, that's the Chicago Board Options Exchange.
Right, in the pits.
In the pits.
Like face to face.
So this is like
Hand signal.
yelling,
Yelling, scream.
like Wolf of Wall Street type stuff.
Exactly. Yeah, very different from how we trade today.
Yeah, sitting in our computers in our pajamas.
Yeah, exactly.
So, I mean, how do you think that environment shaped him as a trader?
I mean, just being in the pits, it really gives you this deep understanding of market dynamics.
Yeah, it's like real time, right?
Real-time feedback, you got to learn to read the room.
You got to be able to think on your feet.
Exactly. Understand like the flow of fear and greed.
Yeah, and make quick decisions.
Yeah, that's invaluable even today.
Even in today's digital world.
Absolutely.
So then fast forward a little bit,
Yeah.
he co-founds Thinkorswim
In 1999, this was huge.
in 1999.
Yeah, huge.
This is like the dot-com boom.
Yeah. Yeah, the internet's just starting to take off.
And they were kind of ahead of their time
Way ahead of their time.
in terms of what they were offering.
Yeah, it was a software-based platform, right?
Like you could trade from anywhere.
Anywhere. You didn't have to be on the floor.
This was groundbreaking.
Yeah. Completely changed the game.
So what do you think was the biggest impact of Thinkorswim on the trading landscape?
It made options trading more accessible to individual investors.
Yeah, because before it was
You had to be
you had to have connection.
You had to be in the know.
You had to be on the floor.
Yeah, they paved the way for the online brokerages we use today.
And the fact that they were acquired by TD Ameritrade for $750 million
Shows you.
speaks for itself.
Exactly.
So they were onto something.
Yeah, for sure.
So then after Thinkorswim, he goes on and launches Tasty Trade in 2011.
Which is another game changer.
Another one.
Yeah,
And this one is a little bit different, though.
it's different.
It's not just a brokerage.
Yeah, they put a huge focus on education,
Yeah, education's front and center.
which is, I think, brilliant because
Yeah.
knowledge is power when it comes to markets.
Yeah, because options can be,
Confusing.
really confusing.
Yeah. And risky if you don't know what you're doing.
Exactly. So he's trying to empower individual investors.
Exactly. Give
Yeah.
them the tools to trade strategically and confidently.
And Tasty Trade was also acquired
By IG Group.
by IG Group.
Yeah, for $1 billion.
$1 billion.
Which is
That's
insane.
Yeah, so clearly he's doing something right.
Yeah, he knows his stuff.
So let's get into some of the strategies
All right, let's do it.
that he's known for, because that's why people
That's why we're here.
want to learn from him.
Yeah,
So one that stands out,
the naked short put.
yeah, the naked short put. This one sounds a little scary.
It's a little dangerous.
So can you break that down for people who maybe haven't heard of it?
Sure, so basically you're selling a put option without actually owning the underlying stock.
So you don't own the stock,
You don't own it.
but you're saying
You're betting that the stock price is going to stay above a certain level.
yeah,
And if it does, you get to keep the premium
the premium that you collected.
when you sold the put.
So it's like a bet on the price not going down.
Exactly.
So when does this strategy actually make sense to use?
So typically, traders who are bullish on a stock,
So they think the price is going up.
yeah, they think it's going up. They would use this instead of just buying the stock outright.
Yeah.
Because selling the naked put lets them generate some income.
So you make money
You make money on the premium
while potentially acquiring the stock later.
at a lower price if it does happen to drop.
So there's kind of two ways to win.
Exactly.
But obviously there's risk.
There's always risk.
If the price goes down too much,
Then you have to buy the stock at that lower price.
which might not be what you want.
Yeah,
So it's not for the faint of heart,
definitely not.
but he also uses vertical spreads.
Yes, vertical spreads are a little bit different.
So how do those differ from the naked puts?
So with vertical spreads, you're selling one option and then you're buying another option.
So you're doing two things
Two things at the same time.
on the same stock.
On the same underlying asset, but they have different strike prices or expiration dates.
So you're kind of like
Hedging your bet.
creating a range.
A range of possible outcomes.
So why might someone choose a vertical spread over a naked put?
So vertical spreads, they limit both your risk and your potential profit.
So it's more conservative.
Yeah, it's a more conservative approach.
So you're not going to make as much.
Potentially, but you also
You're not going to lose
won't lose as much.
as much.
Yeah, and they're really flexible too.
Oh, that's good.
You can adjust them as the market changes.
So you can kind of adapt.
Adapt on the fly.
So they can be used to profit from,
Any market scenario.
if the stock goes up, if it goes down,
Yeah, up, down, sideways.
if it stays flat.
Exact.
So it's about having options.
Having options, that's a good way to put it.
Okay, so then there's calendar spreads.
Yes, calendar spreads.
This is where it gets a little more
A little bit more complex.
nitty the weeds.
Into the nitty-gritty.
So what's the core concept here?
So calendar spreads, also known as time spreads,
Yeah.
capitalize on the concept of time decay,
Time decay.
which means that options lose value
As they get closer.
to their expiration date.
So the closer you get to expiration,
The less the option is worth.
the less it's worth.
Exactly.
So how do you actually use that?
So you sell a shorter term option.
So one that expires sooner.
Yeah, and then you buy a longer term option
So one that expires later.
on the same underlying asset.
Okay.
And you're essentially betting that the shorter term option
The one that expires sooner.
is going to decay faster
Okay.
than the longer term option.
Got it.
So you profit from the difference
In their prices.
in their premiums.
So it's a bet on the difference between those two options.
Exactly.
Okay. That one's a little harder to wrap my head around.
Yeah, it takes a lot.
But I think we got the basics.
Yeah.
Now one that I think a lot of people are curious about.
The 1DTE strategy.
The one day to expiry strategy.
Yeah, this is a fun one.
This is like the ultimate
high risk, high reward.
gambler.
Maybe not for beginners.
So what is this one all about?
So you're trading options that expire within a day.
So you have 24 hours
24 hours.
to make your money.
To be right or wrong.
To be right or wrong.
Yeah, and Sosnoff specifically, he likes to use SPX called butterflies.
So that's a specific
A
type
type of spread
of option spread.
on the S&P 500 index.
So it profits if the index stays
Within a certain
within a narrow range.
Yeah, so it has to be really precise.
So you're betting on the market not moving too much
Exactly.
in either direction.
Yeah, which is tough to do.
Especially in today's market.
Yeah,
So that one sounds like you really got to
know what you're doing.
know what you're doing to pull
Yeah.
that off.
Yeah, it's not for the faint of heart.
Yeah. So we've learned about Tom Sosnoff
His journey.
from the trading pits.
$2 billion businesses.
Educating people.
And all these different option strategies.
Yeah. And it's interesting to see how he's applying these strategies
No.
in the current market.
Yeah,
He's long on the Russell 2000,
which is interesting.
which is interesting.
Yeah.
Because a lot of people are bearish.
Yeah.
He's short on the S&P 500.
Which makes sense
Because
because a lot of people are worried about a recession
Yeah. He's also playing with treasury yields.
and currencies.
So he's not afraid to diversify his portfolio.
and take on some risk.
So I think the takeaway here,
His,
Tom Sosnoff's journey,
yeah,
kind of shows you
the evolution of options trading.
from the chaotic trading pits to today's digital age.
Yeah.
And through it all, he's always been about
Empowering individual investors.
giving people the knowledge,
But the tools
they need
to make their own decisions.
to succeed.
Exactly.
So as you continue to learn about trading
Yeah.
and explore options,
think about
what resonated with you
from his journey.
from his journey?
Yeah.
What strategy
Spark your interest.
spark your interest?
Yeah.
What do you need to learn more about
To feel confident.
to feel confident?
To apply these strategies.
Applying these strategies yourself.
Because options trading can be,
Complex,
it can be,
but with knowledge.
and
It
discipline
could be a powerful tool.
in your financial toolkit.
Yeah, I think that's a great way to put it.
Thanks.
So do your own research,
Do your homework.
learn as much as you can,
And be careful out there.
be careful out there.
It's a jungle.
All right, that's our deep dive on Tom Sosnoff.
See you next time.
We'll see you next time.